Hello. If you are looking for a way to fund your property that you're going to buy, fix, and renovate, or and ultimately rent long term, this is the video for you. I'm Cheree. I'm your favorite lender. If you want to know all sorts of information about funding for real estate deals, showmethemoneycourse.com is completely free for you to get that information. So, what I'm going to do today is actually show you a little bit of information with regards to funding your deals, with regards to fixing a property and renting it out. There are two main ways that you're able to fund your fix and rent. Number one is the home style renovation loan. It is a conventional loan. I really like it, but for some of you, you might not want to have to give your taxes and 8 million bank statements and things like that. So there's the second way to do it, which is two different loans. The first loan is for the first 12 months. You get a fix and flip loan, which is basically a 12-month loan where instead of flipping it, though, you're going to refinance it into a long-term rental. So what we're going to talk about today is like, how do you actually do this? How do you actually get these loans in order to purchase a property? You're going to renovate it, and then you're going to refinance it over a 30-year period of time. So the first thing is that you're going to need that very first loan, which is a bridge loan. It is a 12-month loan in order to fix up the property. And that loan, your approval is going to be based on things like the purchase price of the property, what the construction costs are, what the after repair or after renovation value is, how much down you're willing to put, how much down payment are you willing to put down, or how much are they telling you have to put down in order to get into the property, what your credit score is, and what your experience is. So all of these pieces of information is what people will use in order to determine the terms for that bridge loan. I have it here called fix and flip loan, but it's ultimately a bridge loan. And these bridge loans are anywhere from 12 to 18 months. If you have like a few months, let's say 3 months worth of reno and getting somebody in there in order to live in the property, you're going to get a 12-month loan. The down payments are anywhere from, I've seen as low as 13%, all the way up to 30%. So that down payment is going to be a function of your experience, your credit score, and what the numbers on the property is, what the purchase price is, what the construction cost is, and what the ARV or after rental value is. Rates, I've seen rates anywhere right now from 9% to 16%. It depends on the property, on the numbers, on your experience, and on your credit score. So, appraisals. You're going to have to get an appraisal for the property. Title work is going to have to come out clean in order for you to get the loan. You can close in an LLC with these loans. So that's one of the great things. In fact, the lenders that I work with require you have an LLC in order, or an entity, it could be an LLC or a corporation, in order for you to close in these in order to close these loans. None of these loans have prepayment penalties, so you don't have to worry about that. And then once the renovation is complete, you'll refinance that into a 12-year loan. Into a 30-year loan. So the 30-year loan is called the DSCR loan. And basically, for you to have the most options with regards to funding, for every dollar that you're going to spend in mortgage. So your mortgage is going to be your principal, interest, taxes, insurance, and any HOA fees. You're going to have a dollar of rental income. So the appraiser, after you have done your renovations, the appraiser is going to come back to the property when you're ready to refinance, and they're going to ask, what are the market rents for this property? And as long as you have enough rental income to support that mortgage, then that is part one of you getting that refinance. Also, your credit needs to be above a 660. You can be a newbie. This could be your very first deal, and you could still get this loan. How much you're going to have to put down is going to depend on whether you are buying a property in the city, in the suburbs, or a rural area. So if you got really great credit and you're purchasing in the city and the suburbs, and the numbers make sense, then you're going to be able to put less money down than if you're buying in a rural area. Interest rates are close to what you would get for a primary home. They're probably like a half a point higher. So don't let interest rates concern you with regards to this. And these deals are closed typically in LLCs or corporations. Um, so just quick example, if you've got a purchase price of 40,000, construction cost of 30,000, and an after repair value of 100,000, um, could you get this? The answer is with the bridge loan, with that 12-month loan, you would be able to get the money in order to purchase the property and in order to renovate the property. And let's say that you have $70,000 in the property with regards to purchase price and construction costs. We are using a very simple example. We're not considering closing costs and things like that, but there will be closing costs. But then you have renovated it. It's now worth 100,000. You can basically refinance that property anywhere from about 75% to 80% of the value. So you'll be able to get about $75,000 to $80,000 out of this property. You would have to pay off that bridge loan. And if there's any cash left over after the closing costs are taken care of, then you get to even have money where you're able to cash out. So that is the discussion. You could call or text us at 571-583-4600 if you want to speak with me. If you want to learn more about any way that you are able to make money and get the loans you need for your deals. So that is it for me. Thank you so much and have a blessed weekend. And I'll see you next week. Take care.